I do want to start with this on the show today, which is the stock market crash. There are some troubling signs this morning. I mean, first, I can just mention China before we get into the United States side of this whole thing. Of course, the Evergrande crisis we brought to you in another video about a week or so ago when we talked about China's largest real estate developer basically not being able to pay its bills. Hey, does that sound familiar? Like the United States government not being able to pay its bills, right? So Evergrande not being able to pay its bills in China, and that we were hearing from experts anyway that was saying, look, this is just the tip of the iceberg in China. This is just the very beginning, that it's about to get worse, that you're going to see a lot more a lot more real estate developers and a lot of other banks also having these big issues in China. Well, they're right, because this morning we're learning about Fantasia, which is it's not a Disney movie. It's a Chinese real estate developer. They failed to make their big payment yesterday. Millions of dollars, hundreds of millions of dollars in payments that they just couldn't make yesterday. Here we go. Get ready. Buckle your seatbelts. Evergrande, Fantasia. Is the Chinese government going to prop these banks up and these developers up? Or are they going to nationalize them and sort of roll them into themselves? But this is going to have global reverberations. Make no mistake about it. So please pay attention to what's happening with China. We are not an island anymore. All of this is tied together. Same thing is true of what happens in the United States, has ripple effects around the world, like in 2008, 2009. So now we get news this morning about a potential 1929 style stock market crash. According to a couple of different experts, John Wolfenbarger, who's Bull and Bear Profits CEO, says that U.S. stocks may be on the verge of starting the biggest bear market since the Great Depression. I'm looking at the market this morning and looking at the futures, looking pretty fine right now. That's the thing. Like, there's always this calm before the storm in the markets. You notice that? Do you notice how, very much like a hurricane situation, it's a very pleasant day. That's what people were saying about Galveston, Texas in the early 1900s and 1901. Right? Wow, it's a beautiful day. And then 24 hours later, the entire town is destroyed. That's what's happening. So I don't know about you. How many of you watching right now have your money tied in a 401k plan? Have your money tied in the stock market? Have your future retirement tied to the stock market? I've been telling you for months, if not years now, that if you have your money in stocks, if you have your family's future in stocks, you need to get your head examined. That when you are, you're basically holding paper assets that are tied to nothing. By the way, who do you think gets the money first when a company has problems, right? The board members. The shareholders don't. So you get zero, okay, if a company collapses. You get exactly R2D2. You get a zero if the company collapses. Who's texting you at, what is it, 6 a.m? How are you?
Philip, yeah.
Oh, okay.
I have him on. You and him are on favorites, so that you get through my focus.
Good. Yeah, that's like my wife, my wife and you. We're in the same boat here. So how many people, I'm just looking like Frederick Lasorte in our chat says 401k should be 401, not okay. Yeah, exactly. And this is the thing. It's like, so what do you put your money in? Well, you put your money in safe assets, historically safe assets for 4,000 years, which have been safe, like real estate, right? Gold, silver, precious metals. That's where you put your money as a hedge against this inflation, as a hedge against this coming crash. So, or you can protect yourself. If you've got a 401k plan or retirement plan with your company, it's time to have a conversation with your provider and saying, okay, how can I protect myself? Maybe moving some of that stuff. And I'm not a financial advisor. I can't tell you where to put your money. But what I did was, in order to protect myself, back when I had a 401k and I couldn't tap into the 401k unless I left the company, I moved everything that was out of the active stock market. Okay. And I moved it into money market. I moved it to really, really boring, conservative, safe stuff. And it really protected myself. And that's what you can do. So again, let's take a look at this piece. This is a pretty troubling piece this morning as stocks are about to kind of hit this 1929 crash. Veteran analysts echoing 1929 crash of today's stock market. Let's go through some of this. Stocks are climbing following a big wipeout. So that's what you're seeing, right? You're seeing like the stocks going up. Tech stocks, right? We saw Facebook down. So now things are kind of going up. The NASDAQ up nicely, about 1.25%. Not bad, right? S&P kind of going up towards, again, could hit another record close, right? But we've got this jobs data coming on Friday, right? And so we'll see how the jobs data looks, right? But what CEO John Wolfenbarger is saying is that this could be the biggest bear market since the Great Depression. And by the way, I've been telling you with a number of other experts, Ray Dalio and others, that because of the amount of money that the Federal Reserve has been printing and sending out to these big banks, like we are on the verge of major catastrophe. A total inability to pay this back. Total inability. Now, what he says is now with the Fed talking about tapering and money supply slowing significantly from 39% in February to 8% in August, perhaps that is enough of a tight monetary policy to change investor psychology to a more bearish mood. We'll see. Excuse me. He spent 22 years as an analyst. He says, I'm not a permanent bear. But he said right now, if you see when like you're watching the S&P 500 moving average closely, if the 250 day currently at 4,000 were at a really breakthrough, that could trip a major drop for stock. And you look at look where we are right now. Just get a sense of his history here and how this shakes out, right? Early 2000s. Tech bust. 2008, 2009, recession. Similar signs here, obviously with COVID, but similar signs in the market. Similar signs in the market right now, where we have this 200-day moving average slipping behind and showing these big pullbacks since 1980. Similar signs of these big pullbacks and big collapses. But because one thing that we need to consider, if you take his recommendations along with the likes of other market analysts who say that these companies are sitting on massive amounts of debt. Like they're not, as we were joking yesterday, they're not hiring people. Like they're not putting all of this money towards increasing wages and hiring. No, they're buying their own stock back. They're giving their CEOs huge golden parachute salaries.
Imagine if we did that as small business owners. We would be in prison. Like we'd be getting audited and
that's how these guys do it though, and they continue to take all this money from the Federal Reserve. So the Federal Reserve continues to pump out $120 billion, which they may pull back on this tapering program over the next month or 2 months. But nevertheless, they're still getting all of this money at 1% interest rate. And what are they using it for? What are they using it for? They're using it to buy. They're using it to buy other things. They're not using it to reinvest in the company in form of hiring people, and they're sitting on mountains of debt.
Well, and think about that. So basically, they borrow our money at 0% interest, right? And they're supposed to be. And if you talk about banks, they're supposed to be loaning it back to us, but then they loan it back to us in the form of credit cards and stuff like that at like 20% interest and stuff like that. So we pay all the interest. They get it risk-free. We pay the interest if we get it, but we never see it because a lot of these companies never go lend it out. It goes towards bonuses. So basically they're taking our money at 0% interest.
Yep. Yeah. They're taking taxpayer money and then lending it out 0% interest to these companies. It's just a big, 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 field day for them. So again, protect yourselves, folks. Make sure that you're protected financially. Whether it's investing in crypto or other assets that are outside of this corrupt system. Do you want your family's future tied to this? Do you want your family's future tied to a volatile stock market? Now, I'm not saying like some of these companies are going to be gone, like an Apple or something like that, where I have some of my long-term portfolio, but I don't have my family's future tied to the stock market. I have a small portion in the stock market with long-term companies that have sustained during crazy times, right? So I'm not necessarily worried about like a Ford or an Apple or those types of companies. So again, but playing speculation right now, having your money in a 401k with all of these fees and not having a plan when the bottom falls out over the next 6 months, 7 months, whatever it might be. I mean, the writing is on the wall. How many more brilliant analysts who've nailed it before, by the way, repeatedly been correct? I mean, look at Ron Paul, for instance. I mean, here's an example of somebody who's repeatedly been correct, and he is predicting a major correction. How many more people that have been correct time and time again do we want to listen to? But I think they just kind of keep buying like drunken stock market guys because they're like, we'll be fine. And they right up until the last minute, they're trying to get that money out of that lemon, like right up until the last possible second. And they pull their money out, they run for the Hamptons.
Well, and get this too, like Ron Paul was exactly correct. And they're borrowing our money at 0% interest. And then they go and they make these bad investments and everything. And then when they start to run out of money, we come and bail them out for the stupid stuff that they did with the money.
Right, exactly.
And like Ron Paul said, like back then, he's like, let them crash. If these guys are making these bad decisions, they should be allowed to just crash. Like Barrett and Stearns and all those, they should have been allowed to crash. And because it would have been a lot easier to get back from that than where we're at now. Because all we did was perpetuate the inevitable, which is coming.
Yeah, all we did was kick the can down the street. So we never allowed ourselves to go through. I mean, this is exactly what Neil Kashkari talked about. We never actually had the full correction because the federal government stepped in, right? We never had the cleansing that we needed. So these banks got propped up, and that's exactly what's happening right now. And all of these banks are just flush with cash, and they're making record profits because the Federal Reserve just continues to pump billions of dollars per month there. Get ready,
we
folks.
Can't get a stimulus.
Yeah. Congress can't figure out, its ass from a hole in the ground to try to get a stimulus to us. So that's the very latest on the stock market. Protect yourselves. Drop me a comment below about what your plans are. If you have any questions, drop them in the comments below. I will attempt to answer them on this investing front. Thanks for subscribing to the channel. You can also become a channel member by going to morninginvest.com/join, where you can stick it to the mainstream media and support independent journalism. We're able to bring you the stories that you won't see on any of the major billionaire-backed networks. Thanks so much. We'll see you next time, everyone.